Welcome to TradeTheNBI.com. This is John's Reports for the 24th, another action-packed day in the markets. Things were looking a little bleak. We started with limit down, and it was just a matter of waiting for it. The stimulus was supposed to get passed. It turns out they tried to slide in the Green New Deal in the package, and that was a no-go. So that postponement really put the market into a frenzy because there's just no going back from the apocalypse economically that's taking place with everybody shuttering in place. It's this no-win situation I've talked about. You know, you can fight the virus, but you can also make the cure worse. But there's a fine line. You can't just inundate your medical facilities with a bunch of sick people, even if most of them recover. The percentage that won't will still overwhelm the setup. So the whole idea was always been from the beginning to try and make it so that it's a moderate increase, because this turns out to be highly viral. That said, the Fed decided to come in and throw unlimited buying at everything, and that was enough to get the market excited. But as it looked more apparent that there wasn't going to be agreement between the Democrats and getting something done because they wanted to throw that pork into it, the market really got spooked by that, because you can't get agreement on a situation like this. Where it's a crisis and you need to start playing, politics with it before an election. That doesn't look good for getting anything done, and that's what the market responded to. So if there's encouraging word out of that, you're going to get some degree of a spike. But at the end of the day, you've got to look at, what are these companies making at this particular point going forward? Will the treatment that the president recommended to people try, will it work? Hey, we'll know in a few days. If that turns out to be promising, I think you'll see a huge rebound that would be significant, because it means that they could lighten up the restrictions, still have people getting infected, but it would be manageable from a health standpoint and not be devastating to the emergency rooms and hospitals. That's going to start really taking an effect in the next few days, just as Italy's will start to decline here in the coming days, because based on our basic math, it takes about 14 days from when you start a full quarantine to begin to see the slowdown in the rate of increase in cases, and approximately 18 to 27 days you start to see deaths go in a serious decline, and then, like China, it took another month or more before it really got things flattened to the point where the rate of increase was completely eroded, and you just had a steady stream of new cases, but it wasn't exponentiating like it had been. And so that's really what they're looking for. But from our signals, we still haven't had a buy. We've been orange caught between cyan and red, which is continuation, and continuation in this case is south. We did see some improvement from midterm buyers, with no steel reset though. It's going to be muted as to what can be done, and this is where falling down from my view, the 38% from when we originally short, this is an effective place to be from a stop standpoint for those who are smart enough to take it from the broader thing. People like me who are constantly trading in and out of it get to take advantage of all these big swings. And so even being short from the weekend when we had that intraday trade up in the mid-24s and just allowing it to go, it's a piece of cake with that. And then a little bit later we can look at the intraday chart, because we ended up with some decent buy signals that took place in between. NASDAQ, similar situation, a little bit stronger because it had the dip below the orange line already, so it may actually see that pressure the 23%. This formation right now that we're starting to see for early action is what I call a little duck bill, where it sort of makes this flat lower and upper bill where they're just going across. It's still a continuation mode, and as long as you're still fading, it's just not great. If we start to see it spike up, the problem is if it spikes up, you're already getting back to above the 13.5, in which case you're going to develop a return situation which will be bearish. This is sort of the difference when you're down here. You're looking for the potential of a greater pop because you have a steel reset, and short-term buyers can keep adding in. In this case, when they added in, it was enough to lift it, but they had no support from long-term or mid-term buyers in the green and red, and that faded. Likewise here, we started to see an improvement from mid-term buyers in that, but we really don't have any money here from short-term buyers to be able to help. Now that we've broken into a new zone, though, with the red DOC, we're above the negative 13.5. It could bode well. I think that that's going to embolden a little bit more buying, that we're starting to see a little bit less dramatic decline. We've met the thresholds that we had for retests. Find a target of 2,000. That if things remain ugly, that's certainly still within play. And if it extends, I think definitely will be, because forward earnings would just be nothing from that standpoint. They're still trying to bring that euro back up. The euro says that they're willing to throw anything at Italian debt, whatever, because it's just apocalyptic. But again, this is the U.S. Fed. If it starts to come up, you'll know it's the Fed action, because they're the ones who are going to be providing the liquidity that's going to keep the engine moving. From an oil standpoint, it's going to be still another week or more before the U.S. can even begin to start buying. So all they do is keep talking it up that they're going to be buying. They're going to be buying. So producers are still producing, and there's going to be a major glut that someone's going to have to store somewhere. And from gold standpoint, nice little pop now that all this selling from everybody needing to liquidate and cover margin, all that has been wiped out now. Safe haven aspect of gold will reemerge, if modestly. So from an intraday standpoint, all the way over here on the left, we started out with that limit down move, and we just kept going sideways, and then we started to get the early buy action was going forward, and I knew that was probably going to be because of the vote. So the pre-vote buildup started long before that, so I was out from the short. I didn't get the long because I still wasn't happy at this point. When I went to sleep, it wasn't enough justification. I wanted to see further improvement in that shakeout, or I went before the gold and that started to really take off. But that led to a massive rally and a ton of positive extremes that went all the way back into this range right in here. And sure enough, what did we do? We filled those positive extremes. So I was shorting that decline, which we were posting early on prior to the market open. And that particular point wasn't a whole lot to do, because I was working on those functions that I've been having some difficulties with, which is what's delayed me in getting them out. Some of them were working just fine, and others not so much. So it's been a strange thing, because we see the P2, we see the X's, we see P3s with the X2s. So they all function correctly. It should not have been that big a deal to convert them into functioning, but something's not going correctly. But again, this is one of those where, you go with just the colors. You can do that too. Buy the green, follow it up. Jim comes in, breaks the DOC. But even with the other BK and that, even if you wanted to be tighter to it, I always suggest, while you're in the long run of it, staying with the ABM green, which is following there. Or if it's a long, you go with the short algo when price is above. And when it's a short, you go with the long algo from the top. Just FYI. And this came down, produced a little bit of a buy. Now, from my standpoint, until you break that 38%, you really haven't proven anything. By the time it did it, which is in this P3X right over here, you already had a rejection of cyan to red, literally next bar. So it was like exactly what we call a spider. Let me increase the size of that real quick. And through the magic of TV, there it is. So that's what a spider looks like. You get the beautiful legs going up on both sides. You have the body of it, which is just a pivot right after each other, where everything looks good from that particular standpoint, which is why you see that P3, you see the X buy, positive shakeout, cyan's above, and then immediately goes south. There's nothing you can do about those. They don't happen all that often, but when they do, you got to be really ready to flip and go with the adjusted signal. Oftentimes they go sideways for a while, which gives you opportunities to smooth out of them back and forth. But in this particular case, even if you waited here till you had complete breakdown, which would have been the flattening of the gold, if you didn't want to trade into the rising gold, I would have been comfortable with this signal. It's very clean, nothing wrong with it. And once it turned red there, it still dumped down. Then it produced a beautiful yellow candle on rising. This is kind of like the perfect pivot setup. You know, lower, the second one comes up, takes out this previous high right there. At the same time, orange dips. You've also got green going across. It's like the mecca of all things. The only thing you don't have, because it's not been set up in there, is you recognize, okay, hey, I got no steel reset. So your potential is that it may fade. So as soon as you do see, you know, a DOC spread type situation, you're going to be like, okay, I'm ready to fade out of it. That happened right over here before the end of the day. Had nice positive extreme coming all the way back to here, so at least it gives you a set target from the upside of it once the magenta candle starts to begin, which is even comes in a little bit late from the actual DOC spread, which happens a little bit earlier. You know you've got steel coming from a reset in this particular case. Still was all good. You were still below the negative 15 here on the shakeout, and yellow was below magenta. So even taking that earlier just was another couple bars before you broke the APM gold. But with that reset, hey, you got to be, is this going to be short-lived? And that's the first thought on my mind whenever I see those kind of situations. And in this particular case, it rebounded quite nicely, put in the buy right after this lovely blue candle right here on the P2, another X, and voila. Now, somebody might say, okay, well, on those P2Xs, and is that, you know, the final? Well, what they're describing is it's describing an improvement from a DOC red standpoint, and those are all good setups. Often, though, what you'll see is steel fading, or that kind of setup, particularly in orange candles. Those happen a lot, where steel is fading, and so the orange candle comes in, which has all the configurations. But if you wait a couple of bars for that necessary steel turnaround, usually you can catch it at a bit of a discount from where those initial entries are. It just depends. You can go back and look at how that works. But this is the whole point of creating this function, is because even from these signal candles, which turn right now, we'll be able to then run a second series of filters that say, okay, but if you don't have a DOC steel reset, you know, what are your probabilities for it spiking immediately versus, you know, waiting a couple of bars? Those kinds of things can be evaluated in a much cleaner environment, and it really will tighten up the color ranges, because again, this treats it as a trade when it turns green. It's what I call trade management, where it's set a stop and it's going to trail that stop going up and eventually convert. That's why you'll see sometimes it'll fade down before it flips into a color. For some reason on the magentas, it's supposed to go to the red color, but it still stays for like 3 bars before it flips. So I have to figure out what happened loop-wise that's causing that one. But either way, we've been on the right side of pretty much where this market's going. I think now we're starting to achieve a little consolidation buildup, but we're still going to get these big ranges in between day to day, which is nice because you can do 20, 30 points up, 20, 30 points down, and you just do it all day long. It's the beauty of it at this particular point. As always, though, I will keep posting things, and I will certainly send out, I may just send out the functions that I've already completed. That way at least you have that library for anyone who wants to start playing with putting together some of these aspects. But it makes it easier even for me, because I can use those functions then to say, okay, we've identified this. Now we can add these other little caveats to it to really like pinpoint precisely, and hopefully take care of all that for you. So all you have to worry about is just color to color, keeping it simple. Trade well. We'll talk to you later.